All right, let's just get right into it. Today, January 27th, 2026, was not just another good day for South Korea's stock market. No, it was a day that made history. We are going to break down exactly what happened, because this was easily one of the most important financial moments we've seen in years.
Just look at that, 5,084.85. That is the number of the day, and you know what? It might just be the number of the year. The KSIP didn't just cross the 5,000-point barrier, it absolutely shattered it for the first time in history. And believe me, this isn't just a number on a screen. It's a huge signal, a real seismic shift that we absolutely have to dig into.
So this brings up the big questions, right? How on earth did this happen? Was this just some kind of a fluke, a one-off event? Or are there some really powerful forces at play here? And, of course, the million-dollar question, what in the world happens next? Okay, so here's our game plan to get to the bottom of all this. First up, we'll dive into today's incredible numbers. Then, we're going to decode this whole surge with some pretty fascinating economic theories. After that, we'll put Korea's performance side by side with China and Hong Kong to see what's different. We'll even look at what the quantitative models are predicting and wrap it all up with a look at a potential strategic playbook for navigating this brand new landscape. Sound good? Let's go.
All right, first things first, let's get into the hard data from today's session. Because honestly, the numbers themselves tell a really powerful story about just how strong this market rally was across the board.
Wow, just take a look at this. This rally was, well, it was everywhere. The main Kospi index, it surged over 2.7%. But here's what's really interesting. Look at the Kospi 200, the big guys, the largest companies. It jumped almost 3.5%. So this wasn't just a couple of behemoths dragging the market up. Even the tech-heavy Kosdaq saw some really solid gains. What this tells you is that there was widespread confidence, you know? It was felt all across the market. So what's the big takeaway here? The crucial thing to understand is that this wasn't about one single thing. Not at all. The analysis we're looking at points to what you can only call a perfect storm. You've got this massive AI semiconductor supercycle happening, a really important strategic pivot from Korea's huge national pension service, and, on top of all that, a super complex web of global politics, and they all collided at the exact right moment.
Okay, so to really, truly get why today was such a big deal, we have to go deeper than just the usual market chatter. The analysis we're drawing from actually combines several really powerful theories to explain the mechanics behind this rally. This is where it gets really interesting.
So first up is this idea called socionomics. The basic gist is that it's the collective mood of the crowd that drives the market, not necessarily the news headlines. And today was a textbook example. Think about it. Traders were facing potential tariff threats from the US. So what did they do? Did they panic? Nope. They actually coined a term for it, TACO, which stands for Trump always cops out. I mean, that kind of humor, that confidence, almost defiance in the face of a big geopolitical risk, that's the exact kind of positive social mood that socionomics says can be an incredibly powerful driver for the market.
All right, next up, let's pull from the Austrian School of Economics. There's this concept called time preference. It sounds complicated, but it's really just about prioritizing long-term investment over spending money right now. And this idea, it perfectly explains what's happening on a national level in Korea. You got the National Pension Service, which, by the way, just crossed the $1 trillion mark. That's trillion with a T. They made a huge decision to stop automatically selling off their domestic stocks. What does that signal? It's a massive, collective, long-term bet on the country's own future.
And for our third theory, we have something really fascinating called rhythmic cycles. The core idea is that history doesn't just happen randomly. It moves in predictable waves or cycles. Now, according to the source analysis, today's incredible surge wasn't an accident. It was the result of two huge cycles, a 40-month business cycle and a 9-year structural cycle hitting their peaks at the exact same time. And when these big rhythms sync up like that, you don't just get a little ripple, you get a full-blown tidal wave. And that is exactly what we just witnessed.
But hold on, to really put Korea's massive surge into perspective, we need to look around. I mean, while its market was absolutely exploding, what was happening with its neighbors in China and Hong Kong? Well, they only saw some pretty modest gains. And that difference, that divergence, is absolutely critical. It begs the question, why did one market just blast off while the others barely even budged?
I mean, the numbers here really do tell the whole story, don't they? On one hand, you've got Korea's Kospi roaring ahead by more than 2.7%, just fueled by its domestic tech supercycle and major reforms. And on the other hand, China's Shanghai Composite is up, what, less than 0.2%?
barely a flicker, really, and it's being held up by much more traditional stuff. It's truly a tale of two completely different engines driving these markets. So what's the real difference maker here? Well, it boils down to something that economists call institutional trust. In Korea, there's this big initiative called the Value Up program, which is all about making companies more transparent and well-governed, and that has clearly given investors a major confidence boost. But then you look at China, where there's this lingering uncertainty about regulations. That creates what's known as institutional risk, and that risk has basically been a lid on their market, holding it back even while the rest of the world is riding this huge tech boom.
Okay, so we've got all this context now. We know the why and the how of today. So the natural next question is, where do we go from here? This is where the analysis pivots. We're moving away from theory and into the world of quantitative modeling to get a sense of what might be coming down the pike.
And this is pretty fascinating stuff. So using a really powerful simulation method, we're talking about running 100,000 different possible future scenarios. The model's actually projecting a 68% chance that this bull run continues, heading towards a target of 5450 in February. Now compare that to just a 10% chance of a pullback to 4700. The numbers, the hard quant data, are strongly suggesting that this momentum has some serious legs.
So here's what those forecasts actually look like in terms of price targets for the end of February. The model sees the Kospi continuing to lead the charge, targeting 5480. That's a potential gain of nearly another 8%. Now, it's not just Korea. Hong Kong's HSI and China's Shanghai Composite are also expected to rise, but you can see their projected gains are much more modest. It just goes to show you, those different market dynamics we were talking about are expected to continue.
All right, last but not least, let's talk about how someone might actually translate all this analysis into a concrete strategy. Now, I have to be super clear here. This is purely for educational purposes. We're examining a strategy from the source material. This is absolutely not investment advice. Think of it as a case study, a structured way to think about building a portfolio in this completely new environment.
So, this strategy, called Alpha O, is pretty straightforward. It's built on three key pillars. First, you have the core of the portfolio. That's 60%. The idea here is to go long on the Kospi 200, basically making a bet on the continued dominance of Korea's biggest and best tech companies. Next, you have a tactical slice, 20%, that goes into the Kosdaq 150. This is a bit more aggressive, designed to capture the potentially explosive growth of those smaller AI sub-suppliers. And finally, the last 20% is your hedge. This is your safety net, holding things like gold and Korean government bonds to protect the portfolio if some unexpected geopolitical shock hits.
You know, after a wild day like today, a day full of historic change and new records, it kind of feels right to take a step back and get some perspective. And this quote from the investor Ken Fisher really hits home. He says, "Nothing really important has changed in hundreds of years." His point is that, yeah, the technologies change, the headlines change, but the fundamental patterns of the market, the stuff driven by human emotions and big economic cycles, that stuff stays remarkably the same.
And that really leaves us with the big, ultimate question, doesn't it? What did we just witness today? Was the KOSP hitting 5,000 the start of a brand new chapter, a real paradigm shift for the Korean market, all driven by this AI revolution? Or are we just watching history rhyme once again, seeing another powerful but in the end familiar boom in one of history's great repeating cycles? What do you think? I guess only time will tell.